All right, welcome back. This is SeeWing Yee from the Yee Real Estate Network. So today I'm going to go over a unique tax strategy which I believe you can utilize. And before I go any further, I'm going to provide a disclaimer. I'm not a licensed tax advisor. Please, this is for educational purposes only. Please consult your own licensed tax advisor or or financial professional to go over your unique situation. All right, so with that in mind, let's proceed and let me share my screen. This is very, very exciting. Now, I'm going to talk about the short-term rental tax loophole, if you will, okay? Well, it's not really a loophole if you not understand the rules and regulations. But I'm going to first start off by saying that I'm going to focus on the investors. There are a number of my investors who already purchased our co-living properties, the single family home, 7 bedroom to 7 bath for $325,000 in Jacksonville, Florida, and also the $600,000 duplex in Jacksonville, Florida, co-living, 14 bedrooms, 14 bathrooms for co-living workforce rental situation. This is a long-term rental. Well, in a way, it's a co-living, right? It's pretty much a new realistic asset class. So again, quite a few of you already are under contract, okay, to be built on a property on the lot you just purchased, potentially to incorporate the co-living investment strategies. And there are a number of you waiting on the sidelines contemplating buying. So I'm creating a little bit of a deadline because this tax strategy pretty much go over a lot of the deadlines you need to incorporate in order to make this short-term strategy work. All right, so very, very exciting. So let's proceed with my PowerPoint. So short-term rental tax strategy, Section 469 loophole. You're going to incorporate cost segregation and 100% bonus depreciation. Before I go any further, this is the typical property that we are offering in Jacksonville, Florida, the co-living property to be built for you, as I mentioned. And this is the price point. Okay, this is the. By the way, we also have a new construction co-living properties in Tampa as well, Tampa, Florida, and in Houston, Texas. The Tampa, Florida is an 8 bedroom, 8 bath, very nice co-living property to be built. You can reserve the lots as well there. And the price point, I think, is $600,000. Then we also have a new construction co-living property available, lots to be built in Houston, Texas, 10 bedroom, 10 bath, I believe, also $600,000, which is very, very, very exciting, very incredible. So we are the top-notch co-living new construction properties out there using past split and everything else. All right, so this is a one-floor model for $320K, and I'm not going to go over the pro forma. And then the other model, the duplex, Jacksonville, Florida, $600K. All right, so let's keep this in mind. All right, so my goal is so this is in fact I'm going to use a case study of one of our investors. She already under contract for her property to be built. So by the end so she bought the lot. We're constructing in all three properties, one single family home, one duplex, and another duplex. So those properties gonna be finished construction in about 4 to 6 months toward the end of this year. So depending on how many properties you are buying, right? You go through the same scenarios, the same mathematical calculation to determine what's unique to your situation. Not all of our investors can qualify to buy 3 of these co-living properties. Some of you can only buy 1, some 2, some 3, some even more, right? So I just ran across a lot of high-end, high earners investors are coming to us to buy this new construction co-living investment model opportunities. And I really appreciate your trust in us, myself and my team, to help you build an amazing real estate portfolio using the new real estate asset class co-living investment model. So let's proceed. So I'm going to use this real study case example of these three properties, 1.2, 1.525 total property on these three properties going to be used as a short-term rentals tax strategies, at least temporarily for the short term. So this is exciting. So of course, when you identify a lot, when we have a lot for you, you all that you close the escrow, you get the lot, then you reserve the property, and then you pay the down payment, several down payments in the next few weeks, equal to 25% down payment, right? And so so our builder can help you do the construction of the loan using the few draws of money, okay? And when you are fully leased up, when the construction is done in about 4 to 6 months, hopefully, then you place your property into service and start leasing the property. So the timeline is 9 to 10 months, but it's not that long. It's within 6 to 8 months, typically on ideal situation. So that'll take you. So therefore, what you're going to do? So what you're going to do? You can convert these three properties, these co-living properties, into a short-term rental strategy. Typically, the last 2 months of the year, November, December 2026, right? So the IRS rules allow you to convert your property mid-year or toward the end of the year. The IRS evaluates the period of actual use during the tax year. If you convert your regular rental, in this case, co-living properties, to a short-term rental during the year, the STR rules apply from the date of conversion, okay? So no full year requirements. You do not need to operate your properties as a short-term rental for the full year. Even a few weeks can qualify, provided you meet all the material participation and average state tests per IRS law, all right? So what you're going to do is then after you capture the first year tax benefit, then the beginning of next year, January 1, 2027, you can pivot back to a long-term rental co-living property with professional property management. We're using past split to do the marketing and using co-living property management to help you so you can become a hands-off management for stable, almost passive income on your portfolio. Again, always verify with your CPA to go over your situation, okay? All right, so the short-term rental tax loophole, what is it? Section 469, as long as the key requirement, the average guest stay is around 7 days or less, material participation, 100 hours. Hey, all you gotta do is spend 2 weeks, go over to Jacksonville, spend 2 weeks to accumulate 100 hours, as long as no one else spend more hours than you, right? You're pretty much self-managing. You're not hiring a property manager yet for those few weeks or few months until the December 31st, 2026. All right. And then you're also going to do a cost segregation study. And we have the resources for you. We help you with that. So the cost segregation allow you to break down the depreciation aspect of your property. There are some items that are depreciated over 5 year, 7 year, 10 year, 15, 20 year. For example, your boiler, your appliance, your cabinet, your refrigerator, your landscaping. All those can be further break down using a engineering cost segregation study. And then of course the revised tax law a couple of years ago allow you to achieve, which is amazing, 100% bonus depreciation. You can write off those items from your property. You can accelerate and achieve all those deductions in the first year, 2026. Okay, so again, it's not too hard. All you gotta do is place your property in service. Placing service is market those property as a short-term rental. all you got need, like, if you only have 1 or 2 months left, when you close escrow on your property, you can convert it to STR. Then all you gotta do is get maybe 1 or 2 short-term renter to stay in your properties for a few days. Then it meets the requirement. Place your property in service. Okay, so only a partial of the year, as long as you do 100 hours. That 100 hours is very simple. Like I said, right? You buy you go there for a week or 2 weeks in Jacksonville, whatever the case may be, and just buy the furniture. Just uh, fix up the property and do some cosmetic repair. You gotta do some labor and document your hours. Make sure you have 100 hours of hours of documentation, which is not hard, right? I mean, 100 hours, you can complete that within 1 to 2 weeks, and then you qualify, just like that. So it's not that hard. So, all right. So let me see what else. Then if you're able to achieve this kind of activities, then your paper losses can offset against your W-2 income, against your active income. If you have a very high income, you can achieve substantial reduction of your federal and state taxes. All right. So normally, right, when you own a rental property, is a passive activity. You can only deduct your passive losses against your passive income. This is this according to IRS rule. In order to change your rental property from a passive activity into an active activity, you have to either perform the REPS rule, REPS, the real estate professional tax status, which is much more stringent and difficult. You have to do 750 hours in self-managing of your properties. And you have to self-manage also. And only if you're the ideal situation, you can't qualify if you have a regular full-time job, unless you are married filing jointly, you are working full-time as a highly compensated individual, and maybe your spouse is working part-time or no time. Then only in that scenario, you can qualify as a real estate tax professional, 750 hours per year to offset against your active income from your passive paper losses, if you will, right? But when we talk about short-term rental tax loophole, you don't need all that 750 hours. You don't need to be one spouse is working full-time, presumably earning a high income. The other spouse is a non-working spouse. So you can use the non-working spouse to do 750 hours. We're not using that rule. We're not using the REPS rule, the real estate professional rule. The short-term rental tax loophole rule is much, much easier. Okay, so I'm sure some of you understand what I'm saying, but many of you do not, which is fine. Okay, you can do some further research. So with that in mind, let's continue with this, which is really, really exciting. Okay, so yeah, here it is, right? And here's what I'm trying to say. Again, when you do a cost segregation, there are some items inside a property, like a personal property, appliance, carpeting, fixtures. They are 5-year depreciation, 7-year depreciation, office furniture, equipment, land improvements, 15-year depreciation or landscaping, driveway, fencing, sidewalks, and 27.5-year depreciation. Well, short-term rental is commercial. Short-term rental is 31.5 years. But anyway, the roof and the foundation, you cannot accelerate. You cannot reduce it, because that's 31.5 year depreciation paper method. So using the same 3-property scenario, the 2 duplex at 600K each, and the 325 single-family home co-living property, in this case method illustration, which is a real case, by the way, yeah, so equal 1.525 cost of the 3 properties. We minus 20% the land. The land is not depreciable, so the cost basis, the adjusted cost basis, is 1.22 million. All right. Then you do a cost segregation. When you to fast forward, I'm not going to spend too much time. All this asset, cost segregation, what it boils down to is 30% of the structure equal the bonus depreciation and cost segregation. So 30%, okay, of this adjusted basis, 1.22 equal around $366,000. By applying the rules, the last 30 to 60 days of ownership, you convert into all short-term rental placed in service on all three of these properties. The simple math is the depreciation, entire depreciation, you allow is around $366,000. If you're working, so short-term rental, it doesn't matter. It's not a real estate professional rule, right? I mean, you could both, if you're married or both working full-time, you can still qualify to use the short-term rental tax loophole as long as you do the 100-hour material participation and no one else can exceed those hours. You self-manage. You cannot hire property management for this time frame duration. The average length of stay for a short-term renter is no longer than 7 days. That's it. 366K. If let's say you make around $400,000 of W-2 income, right? Active income. This buying these three properties, this paper loss can offset against your tax against your active income, against your W-2 income, essentially wipe out your federal taxes, right? And but by the way, we're not even going to mention the tremendous amount of profit you can make from buying these co-living properties, right? Let me backtrack the massive amount of money you can make based on the way we use this kind of property, right? I mean, you're buying a co-living property for only $320K, each room rents for at least $1,000. So you have like $7,000 monthly gross rent, minus your mortgages, taxes, insurance, property management fee, and everything else. Almost $2,000 a monthly cash flow on this 7.7 single family home and a duplex. Just do the math, right? A duplex, $600K. We're talking 14 rooms, 14 individual rooms you rent to the workforce housing renters out there, right? So your gross rent per month is in excess of 14,000, right? You minus all the deductions, the whole 9 yards, you net monthly cash flow of $5,000, which is amazing. Look at the cap rate, 16% cap rate. Annual ROI is 41%. On your single family home, right? The cap rate is 13%. And annual ROI is 27%, which is, co-living properties. It's just amazing returns, right? If you do it right, if you buy in the right location, if you buy a brand new construction, co-living, which is what we do, which is no one else out there in the country are doing brand new construction except us, our team. So we are the turnkey provider, cash flow 100%, almost passive for investors out there. All right, so let's get back. The returns itself is exciting, even without the tax benefit. Now I'm giving you some amazing short-term tax benefit. All you gotta do when you close escrow in October, November, spend 30 to 45 days, up to 60 days, do the 100 hours, convert your three properties or however property you bought from us into a short-term rental. It's just a very, very short periods of time. That's it. It doesn't matter. You have to rent. It's not necessary for your short-term renter to rent all 7 rooms or all 14 rooms for your property. As long as at least one of them rented for at least one time, it meets the requirement because you place the property in service for the purpose of short-term rental, and you do the 100-hour rule. And the guests stay less than 7 days. That's it. This is that simple. All right. So let me conclude this. Let me see what else. Okay, let me catch up with the slideshow here. Sorry. As we conclude this, okay. So again, if let's say you can close escrow September, October. So the next few months, once as your house is being constructed by our builder, it takes 4 to 6 months, maybe slightly longer. Then you commission a cost segregation study. You establish the systems, create a time law documentation, consult with your tax advisor, right? And then around October, November, December timeframe, after you close escrow, after you get the loan, the STR loan, right? Financial property, then you place all three of your properties into service as a short-term rental, and all that, and then after all said and done, all right, then you recharacterize, convert back to co-living, rent by the room, okay, starting the beginning of January 2027. Okay, that's it. Okay, so tax deduction already locked in. It's just amazing. So expected outcomes up to, in this case study, $366,000 of passive paper loss to achieve immediate bonus depreciation in the first year. Okay, so you can use a non-passive loss treatment via STR, material participation, losses, paper loss that is, offset your W2 income and other ordinary income you have, and then the whole 9 yards. The next step is, like I already told you, right? Consult with your tax advisor if you want to use this rule. So to recap, what more can I say? You're getting some amazing returns by buying our new construction, rent by the room, one bathroom, the one bedroom scenario. Okay, we have all the infrastructure ready, available for you. Our builder, our team, our past split partner going to do all the marketing, the whole 9 yards. Then you spend 30 to 60 days converting one, two, or however property you bought from us, our co-living properties, and then take advantage of this great tax loophole, if you will. And then when the year's over, then you go back to the regular co-living rental, and use past split to do the marketing. Use our co-living property manager to manage for you. You can become pretty much a passive investor, and just enjoy your co-living long-term portfolio with time freedom to do the things important to you, and you delegate everything else to your property management to do all the work for you, so you can have time freedom to enjoy your life, because you have built up an amazing portfolio, high returns, high cash flow, tremendous tax benefit. Surround yourself with a team of financial advisors, which we have them. We have all the resources available for you. So we can do this. We can refer you to all the teams that we talked about. Is a one-stop shop. So that's what we do within our network to help you achieve your financial goals. Thank you so much for watching. One more thing. If you see value on this presentation, please like and subscribe to my YouTube channel. And also, if you have not already done so, please put your email on at the bottom of our description on my website, so you can become a free member of our real estate community, so you can receive free real estate content coming into your email inbox every week. And finally, for those of you who are very, very motivated, who feel these kind of strategies I just discussed are in alignment with your goals and objectives, and you have the financial capital and the motivation to do this kind of deals, please contact me directly for a consultation, free consultation, so we can go over your goals, your motivation, your inspiration to achieve real estate wealth using the strategies I just discussed on this video. Thank you so much. This is SeeWing Yee from the Yee Real Estate Network. Thank you for watching. Have a nice day. Good luck. Bye-bye.